the obvious thing to talk about today would be, okay, the stock market's dumping because of tariffs. So we could start out talking about that. What do you think? There's some that say it's just posturing and they're going to renegotiate things, but I don't think it's just posturing. It looks like the market's finally actually believing it's coming true. What do you think?
Well, I think I would have. I wish I would have taken all of my money out of my annuity back in January, say January 19th, as opposed to have left it in there. I think what we're witnessing is one person's attempt to just turn the entire U.S. economy on its head. And everybody's got to be good at something, and that somebody seems to be good at this because, you can't lose 1,700 points yesterday on the stock market, another 1,800 points today. I mean, that doesn't bode well for anybody. So.
Yeah, it'll be interesting to see what this amounts to over time. If you look at obviously like say a 5-year graph, we're still getting down there. And then when you zoom out to maybe, the Dow Jones, zoom out to back in, 2015, 2018, it's like, well, we're still way above that. But 2008 happened in what felt like overnight. So I could see that happening again, a 40-50% drop.
It's just scary in the sense that one of the things that allows businesses to plan is to understand what the future is supposed to look like, and when you're trying to understand what the future is supposed to look like, it shouldn't be like a whiplash type of thing where one day you say, okay, there's going to be tariffs, and then the next day you say, okay, well, maybe next month. It is, businesses thrive on some type of certainty.
Yeah.
And when you introduce uncertainty to this whole thing, because you said it a minute ago, well, there's some people who are suggesting that this is just posturing and this will all end very quickly. Who the hell knows?
Right.
Nobody knows. Everybody's trying to rationalize it. And I don't know how you rationalize the irrational. And quite honestly, I don't know why you would try to normalize what's not normal. And I think the sad reality is that we can't and we shouldn't allow those elected officials to try and normalize this. This is not normal. There is nothing about tanking the global economy and the U.S. economy as normal. Oh, we need this. Suddenly it's like, well, there has to be some short-term pain for the long-term gain. Well, if you couldn't tell us all up front what the short-term pain was going to be, why should we believe that there's going to be any long-term gain? There's absolutely no transparency here. And this is what happens when you don't have it. And it impacts the automobile industry, which is one of the biggest drivers of the economy in the U.S. It impacts manufacturing. It's crazy. It's just crazy.
I think a lot of YouTubers, say, car YouTubers especially say, and I've said it in the past, that, we thought the car market or car bubble was going to burst a long time ago, and it just hasn't.
Yes.
One argument would be that, at least my argument is that I don't think the car bubble can crash until the stock market corrects, because I actually think it is way overinflated. But we might have a completely different perspective on that. But I don't see, because it only takes 4 to 5% of the market to buy new cars, and that keeps the automakers happy. They're willing to sell to the wealthy, and they don't really care what happens downstream of that.
Yeah, it's about 15% of the population that feels as if they can participate in the new car market. So obviously manufacturers have pretty much abandoned the other 85%. Some have tried to placate that 85% slightly with some lower priced imported vehicles that will suddenly become higher priced imported vehicles. So those people who were taking advantage of the Chevy Trax and some of the other vehicles that were coming in from Korea or China that GM was offering, those people are going to be out of luck because the prices are going to go up eventually. Are the prices too high? Yeah, the prices have been too high. The amount of growth in the prices since COVID is, pretty staggering and pretty outrageous. Were the prices significant enough that the manufacturers were losing money? Absolutely not. Okay, they have figured out that they're okay selling the same number of cars that they have been basically for the last 40 years, and they don't have to grow to the market, and yet their profits can continue to go up. So yeah, they're okay with it. I would say the American consumer isn't as okay with it. They would like to have more affordable options, I would think. But,
yeah, I would say so. Well, and then the real bummer is I just looked at this before we jumped on here, and it's not every car, it's not every manufacturer, but the used car prices are they're gonna follow with this tariff talk, and with increased new car prices, we're gonna see the used car get hit again.
We have friends in the business, and we're getting reports of auction prices are significantly higher today for the same vehicles than they were, say, a week ago. And a week ago they started going up. So used car prices are going to be significantly impacted. It creates an even less affordable environment for people who need to buy a car. And one of the major problems with the car market is that it hasn't been affordable. It doesn't bode well, in my opinion. It doesn't bode well when only 15% of the people out there can afford to feel as if they can afford to buy a new car, and you've pretty much written off 85% of the population. If you figured out a way to make more affordable cars, then maybe suddenly it would be 30% of the population that felt like they could participate in new cars. But now we're going to see that 15% probably become 10% as new car prices go up. And I will bet dollars to donuts that probably within 6 to 8 weeks, we see that the average new car transaction price is in excess of $50,000, which is a barrier it's never broken before. And then conversely, used car prices will tick up, so that there would be that spread that makes the used car appear as if it's a better value than that new car, even though people are going to be paying more for that used car than they would have, 3 weeks ago.
Yeah.
So we're already seeing it. It's scary.
Yeah. Boy, that's not what anybody, obviously not what most people want to hear, but that's the reality,
Yes. I mean, I wouldn't think most people want to hear it. I would think you want to be able to expand your market by including more people who can participate in your market. That's just me. Obviously, I'm just some poor schnook who doesn't know what he's talking about, because all these manufacturers out there seem to be doing okay by shrinking the market. So what the hell do I know?
Yeah, they've definitely taken the approach of, and they've leveraged, like you guys have talked about, they leverage the lending. So if you can't, you can go after wealthier people, go after wealthier buyers, add more features. They've obviously done that. And then the larger, you've got SUVs and trucks are becoming commuter vehicles now. The whole market has changed over the last decade, but yeah, it is getting it's getting a little out of hand for regular people to go buy a new car unless they want to finance it for 72 or 84 months.
Well, here's the kicker. We just received, I think it was yesterday, a PR blast from Edmunds in regards to auto loans. Almost 20% of all auto loans that were entered into in the last month were for 84 months.
Wow.
Let that sink in for a minute. Okay. Almost one loan out of 5 was for a loan term of 84 months. Now, why do people end up in loan terms that are 84 months? Because the only way to make that payment affordable is to keep lengthening the term it takes to pay it back. That's a recipe for disaster.
And negative equity.
Oh my! Forgetting negative equity. Just what do you think the odds are in the 7 years that it takes to pay back an automobile loan, that there could be a major repair that's required? And if you can barely afford to make your monthly payment, do you really think these people have the money socked aside to take care of a major repair if it comes up during the cost of that ownership period? I don't think they do.
No, especially not with newer vehicles. The way how much they cost to repair some of these items is 4 or 5 times what it used to cost to throw in a new engine or transmission.
Yeah, it's frightening. It's absolutely frightening if you ask me.